Well, housing activity remains stuck in the doldrums. The latest figures showing national prices falling in April and new home sales remaining near record lows. The industry is calling on the federal government to use the budget to revive activity. But economists warn there could be more trouble ahead, with property investors racking up $13 billion a year in negative gearing losses. Neil Woolridge reports.
As the mining boom fades, the Reserve Bank and federal government have been counting on the housing market to pick up some of the slack. But the most recent signs suggest the property market is staggering rather than surging.
I think it'll pick up some slack, but I don't think it'll be anywhere near enough. The main problem in Australia is that land prices on those new homes is simply far too high, and it is pricing out a lot of potential buyers.
The national average home price fell 0.5% in April, and annual growth remains below trend at just 2.7%. And while new home sales rose 4% in March, building activity is 20% below the long-term average.
In net terms, we're not actually seeing growth in new home sales that is commensurate with a sustained recovery in new home building.
In part, it's because first home buyers are deserting the market. 4 years ago, they accounted for nearly a third of all housing loans. Today, it's around 1 in 6 after the federal and state governments pared back first home buyer incentives.
When you wind back the grant, you start to penalise builders trying to put house and land packages together. You take momentum out of the marketplace, and that erodes consumer confidence.
Property developer Craig Delaney says conditions are as bad as he's seen, but a recovery could happen later this year.
If banks also loosen up their lending criteria as well, and valuers actually understand that capital growth is achievable again in the marketplace, the building blocks will start to fall into place, and that's what we need to see.
But housing investors could be the next to desert the market. Tax office statistics show that losses from negative gearing topped $13 billion in the 2011 financial year. And with little growth in house prices since then, negative gearing is becoming less attractive.
And the risk is that if there is a large uptick in unemployment, as the mining boom unwinds, there might be some pressure to sell.
I think if we were going to find a problem of widespread concern on the part of investors leading to wanting to rid themselves of housing assets, it's likely something that we would have seen emerge in 2011 and 2012.
Harley Dale says tax and regulation is holding back new home building, and he wants Wayne Swan to use the federal budget in a fortnight to help boost activity.
If you were to reduce red tape regulation around new housing, for example, by 1%, that's going to generate over $1 billion worth of additional economic activity in the economy in any given year.
I certainly wouldn't like to see Wayne Swan give money directly to buyers, because that would be likely to bid up house prices. But there certainly is scope for Wayne Swan to provide funding to the states in order to boost their infrastructure spend.
But with money tight at the federal level, the chances of another round of stimulus for the housing industry look slim at best.